Ladies and gentlemen, in this video, I am answering questions that you guys have sent in to me about the cryptocurrency market. I guarantee you there is something in here that everyone will find interesting and useful. We're asking questions or answering questions, about the altcoin season, whether it will resemble what we've seen in the past or whether it will be completely different, whether it's even going to happen. We're answering questions about the Pi cycle indicator, which has historically predicted Bitcoin tops and bottoms, and whether that will be relevant this cycle. We're also answering questions about whether it's time to buy altcoins given the reduction in altcoin price, to some degree at least. And then we're answering questions as well about where is retail, where are the retail buyers, DCA'ing, right? Dollar cost averaging, is that a good idea? Do I do it personally? Are we following the 2017 cycle or the 2021 cycle, or are we creating something entirely new? How will we know if the 4-year cycle breaks? And what are catalysts for a potential move upwards on Bitcoin? So lots of questions to answer today. I'll answer them all in a rapid fire type format. I won't drag them out too long, even though I can, just so you can get through as many as possible. There were other questions, but I selected these ones because I think they gave a good coverage of what the general sentiment you guys have is, or what you generally want to know. A few of the other questions overlap, so these are the ones I've picked. Before we get into it today, guys, please go ahead and check out the Bitfinex and BitGet exchanges. BitGet being a top 5 trading volume exchange globally. So one of the biggest exchanges out there, which is very, very good and very reputable. It's been around for many years now. The only issue is you cannot sign up from the USA, but everyone else is welcome to sign up. If you are from the US, or if you want a global non-KYC exchange as opposed to BitGet, you can choose Bitfinex. Bitfinex has never been hacked before. It's a very reputable exchange, very low in trading fees. So overall, they're both decent exchanges. I use them both personally. The reason I'm advertising them, okay? I reached out to them for partnership. They did not reach out to me. And with my referral links down below, you can get a 15% trading fee discount attached to your account for life on either of these exchanges. So use those links to sign up. You cannot go wrong. You need a good exchange, so get on one. Those two are pretty decent. In fact, they're more than decent. They're great. So with that said, let's get into the content. We'll just go from top to bottom, and I will timestamp this video, so if you don't really care about a particular question, you can just skip to the next one, but timestamps will be in the pinned comment down below. Let's start from top to bottom here. The first question, do you expect the Pi cycle indicator to come into play in predicting the top in this cycle? So first and foremost, what is the Pi cycle indicator? The Pi cycle indicator, very simply put, is an influential Bitcoin indicator. Essentially, it has predicted tops and bottoms in prior cycles. The price of tops and bottoms in prior cycles. It triggers when, so you'll see on the screen here, we have 4 lines within this indicator. We have one red line, which is the top line, one green line, which is the bottom line, and 2 yellow signal lines in the middle. What happens is when the yellow lines, both of them, cross above the red line, that is an indication that the Bitcoin top is highly likely to be in. When both the yellow lines cross below the green line, that is an indication that the Bitcoin bottom is highly likely to be in. Now, you can see historically it's worked quite well. It predicted both the tops in 2013 and it predicted the bottom in 2013 with perfect accuracy. It then went on to predict the top in 2017 with perfect accuracy and the bottom in 2018 with perfect accuracy. It missed the 2021 top, okay? It did not manage to trigger the 2021 top, but that's because these are moving averages, okay? The signal line, the red line, the green line, they're all moving averages, and so they move in relation to Bitcoin price action. And we see the tops and bottoms get triggered essentially when the price action gets too exponentially parabolic, either to the upside or the downside, and hence the signal lines, which move more rapidly and more, according to the recent price action, go above or below the green or red lines. That's how it works. So when the price starts moving very, very rapidly to the upside or the downside, you generally see the Pi cycle get closer and closer to triggering. The problem with 2021 is that we saw a parabolic move. The Pi cycle got close to triggering a top, but then we saw the dramatic and, pretty surprising mid-cycle correction that kind of dragged the indicators down, dragged the moving averages down. And then by the time we got back up, it was already November. We were meant to top out there as per the 4-year cycle, and the Pi cycle just simply didn't have time to peak out and trigger. So, and then the problem is there that, now that we had that kind of deviation here, which was not what we'd seen in previous cycles, by the time we got to triggering the bear market bottom, the signal lines were actually much lower than they needed to be, and so it triggered the bear market bottom quite early. a lot earlier than the bear market bottom actually came in. It actually triggered the bear market bottom about 6 months early. So 2021 was a bit of a mess, and the price cycle did miss 2021 due to structural reasons. When asking the question, is it going to work this time, it's a bit hard to answer, because we know that the general trend for Bitcoin is that the 4-year cycle takes place. But within the 4-year cycle, we have dramatically different cyclical structures. So 2021, although it was abnormal, was not actually a break of the 4-year cycle at all. The 4-year cycle is based on date range trends. It's based on how many days from the halving, or how many days from the prior top, or how many days from the bottom it takes to reach the actual top. It doesn't really care about structure. So each cycle is actually different structurally. For example, 2021 was a double top or something akin to it. 2017 was just a regular upwards bull market. 2013, we had 2 significant peaks. And so we can expect that this time the cycle will be different as well. The structure will be different as well, even if we pertain to the 4-year cycle. Therefore, it's actually very difficult to know whether the price cycle indicator will play out perfectly this time. However, it is something that's worth looking at, because when it does trigger, it's got a very high degree of accuracy. The problem is it doesn't actually have to trigger for us to maintain the 4-year cycle. And the 4-year cycle is, of course, more influential and more strong than the price cycle indicator. So it's something I'm looking at closely, but not something I'm relying on fully. That is my answer. And that's a long answer. Next question, will there be an altcoin season? And if so, will it resemble anything like the last cycle? Well, let's just establish the ground rules here. The only time we've ever seen an altcoin season occur is within the bounds of a traditional 4-year cycle bull market. So assuming there is a 4-year cycle bull market, yes, it is highly likely we see an altcoin season. However, if the 4-year cycle breaks, we have absolutely no idea. We just don't have any data. So assuming a 4-year cycle, assuming a regular bull market, it's very likely we do see an altcoin season. That's been the trend so far. But whether it will resemble anything like the last cycle, it depends what you mean by resemble, okay? Altcoin season literally means altcoins outperforming Bitcoin. It doesn't mean anything more particular than that. It doesn't mean certain altcoins do certain things. It doesn't mean all altcoins 100x. It could literally be altcoins going upwards 2x and Bitcoin going upwards 1.8x. That's an altcoin season by definition. So do we expect it to resemble price cycles? Well, yes, we do, in the sense that Bitcoin dominance should drop. But again, just like Bitcoin, each cycle is related and connected, but they're not all the same. We have different structural patterns throughout each cycle. Again, 2021 was a kind of something like a double top. 2013 was 2 significant peaks. 2017 was straight upwards. We can expect kind of the same thing with the Bitcoin dominance chart, and that's actually been highlighted in recent weeks. So for example, we thought that there was a trend forming on Bitcoin dominance where it took 322 days from the start of the altcoin season to the end of the altcoin season, but that trend's been broken just in recent weeks because Bitcoin dominance has reached a new high, and this will push the end of the Bitcoin dominance drop past the 4-year cycle deadline. So, there has been already evidence that this time it will be different structurally. But in terms of how money flows in cryptocurrency, the whole money flow cycle with money going first into Bitcoin, Bitcoin rises, people get bored of Bitcoin, they get greedy, they put their money into altcoins, altcoins rise, altcoins max out, there's nowhere else for the money to go, people sell into fiat and the market crashes. That's how the money cycle in cryptocurrency works. That's how it's always worked. And so we can assume that if we do see a regular bull market, there will be some sort of altcoin season, but we actually don't really know for sure what it's going to look like. We just know it's likely to occur. Next question. Considering so many low and mid-cap coins got wrecked recently, isn't it a good time now to buy altcoins given a 60 to 70% reduction in price from local tops? Okay, so he's asking the question, altcoins have gone downwards dramatically. Assuming in the 4-year cycle, we should see an altcoin season. Therefore, should we buy the altcoins that have gone downwards dramatically because they could theoretically be at, quote unquote, discounted prices. They could be getting good entries. Well, the answer is, unsatisfyingly, it literally depends on the altcoin. You look at an altcoin, for example, like XLM, okay? Stellar, top 13 in the cryptocurrency market cap, I believe, at this point in time. It's been some pretty good price action recently. It's skyrocketed to the upside, and throughout November went upwards, over 10x in a very short period of time. Now it's on a significant discount, as you might say. Well, just because a coin is down in price action doesn't mean it's a good deal. It's very important to note. Coins have to go down on the way to their deathbeds, okay? Just because a coin is discounted, just because a coin is 90% down from its high, doesn't mean it's a good buy. It's all about structure. So you look at XLM in 2021, for example. Now, 2021, as we know, was a double kind of peak cycle. We had the first significant move in the market. We went downwards. We had the second significant move in the market. But what a lot of people don't know, maybe, is that a lot of altcoins didn't actually get higher in the second move. Even though the entire market moved higher, a lot of altcoins got left behind, particularly the dino coins, the older altcoins like XLM. So a lot of people would have seen XLM doing absolutely superbly in the first half of the bull market. The market then went down and bounced off support. They would have thought, oh, the market's going to go up again. XLM did excellent, therefore I'm going to buy XLM. It's going to do well again. It's going to break all-time highs. And then it dramatically underperformed the rest of the altcoin market. That could definitely happen to your altcoin. Of course it could, okay? It's not really always a good sign when your altcoin has dropped 60 to 70% when the rest of the market's only dropped 20 to 30%. That's actually a sign of dramatic underperformance and dramatic prior overvaluation. Otherwise, it wouldn't have dropped that much, right? So be very careful with getting into the mindset that, oh, my altcoins are at dramatic discounts. I have to buy more because they're going to do well again like they did at this time here or this time here. It's not always the case. Structure is more important. When you see an altcoin dropping downwards so significantly in such a short period of time, that's a sign of fragility, not necessarily strength. Obviously, it's circumstantial. Obviously, there's exceptions, but I don't have time to cover all of them. So just be careful with that mindset. And I suppose my advice really boils down to you have to learn TA. You have to learn how macro ranges work, how macro price action works, which of course is easier said than done, but it remains true. A question about dollar cost averaging. Do I dollar cost average is essentially the question. And the answer is no, I don't. And I also don't really agree with dollar cost averaging fully in a lot of circumstances. I believe that if you're going to be risking significant amounts of your net worth on a financial market, right, on an asset within a financial market, you should bloody know what you're doing, right? And dollar cost averaging to me is a very reductive way of investing. It's almost like I can't be bothered to learn how charts actually move. I can't be bothered to learn TA. And therefore, I'm just going to blindly throw my money into the market at random prices every week or every day or every paycheck and hope it goes up to the upside. And yeah, okay, you might be right generally. And even if you make money, cool, you made money. But you could have made a lot more money if you just learned TA and bought when the TA said to buy. Now, obviously, there's less complications. You don't have to, spend your time learning TA. Learning TA is a big commitment, of course. It's and a lot of people just don't want to do it. They're not interested in it. That's fine. But in my view, it's like, okay, if you're going to risk your net worth on something, you're going to put thousands and thousands of dollars into something, and you don't know how the charts work, like that's just gambling at that point. And that's something that I can't stand by personally. If you want to do it, you can do it. Sure, it might work out. It probably will work out when it comes to assets like the S&P 500, for example. Maybe even Bitcoin historically, it's probably worked out. But is it the best way to invest? No, I see it as quite lazy personally. And I'm not trying to insult anyone who does it. That's just my point of view. And I would never do it because obviously I spend hours a day looking at the chart. Why would I just blindly buy? Why would I not just buy when the price is good, right? When the charts say it's good to buy. Now, obviously, it's easier said than done. It takes, years really to learn TA to an effective level in which you can be confident enough to outperform someone who just dollar cost averages. And so, yeah, maybe if you've just got no interest in learning TA, you don't have the time, you can't be bothered, and you're happy to risk the amount of money you're putting in, sure, dollar cost average. But for me, as a professional analyst and trader, there's no reason to ever consider doing that. Now, I might dollar cost average in a more unconventional sense. Like, for example, I might have, say, $100,000, for example, that I want to invest into a particular asset, and I might, invest 20,000 here. And then when we see the breakout confirmation, I put another 20,000 in. And then when we see the next correction, another 20,000. It's like I'm buying strategically. Technically, it's dollar cost averaging, but it's not blindly dollar cost averaging. It's strategic buying at certain points to balance the risk and reward ratio. That's something I can get behind. Here's a very important question. What would be the indicator that would suggest the 4-year cycle is broken and the next bear market has begun? So let's understand this first and foremost. The 4-year cycle is strictly based on dates, okay? So basically, if Bitcoin, this is the only way the 4-year cycle would actually be confirmed to be broken. Now, I'm going to get into what would be a likely break of the 4-year cycle in a second. But in order for the 4-year cycle to be confirmed broken, if Bitcoin is hovering below the all-time high at 108,000 by the time we get to October, that will be a break of the 4-year cycle because it's meant to be at the top at that point in time, right? Or if Bitcoin, goes upwards and it's at the highest point it's ever been in October, but then it keeps going and it keeps running upwards into 2026, that's also a break of the 4-year cycle. Another way we can break the 4-year cycle is if Bitcoin goes to a new low at any point between now and basically late 2026, because that's when the bear market low is expected as per 4-year cycle in late 2026. That would be a break of the 4-year cycle as well. So basically, if we do anything other than top out in late this year, that's a break of the 4-year cycle, strictly speaking, by a date range trend. Now, that's helpful to some extent, but it's not actually that helpful because we need to know when to get out of the market, right? Before the end of the year, preferably, because a lot can happen between now and the end of the year. So, I mean, there's no way to objectively know when the 4-year cycle breaks, but what we can know is macro structure. We know that Bitcoin is in a macro bull market because we're seeing macro higher highs and macro lower lows. Macro higher highs and macro higher lows. That's an upwards trend, aggressive upwards trend. You can see it right there in the chart. Look at that upwards trend there. That's a bull market. And so technically, just on a 101 TA perspective, if Bitcoin breaks the upwards trend, it's over. Now, in order for it to do that, I would say we need to break the most recent or prior macro high, which would be around 74,000. Another way we would break the macro upwards trend is breaking below the Gaussian channel on the weekly chart, or breaking into the Gaussian channel on the weekly chart. The weekly chart Gaussian channel has been very influential. And what you can see is that historically, whenever we've entered the Gaussian channel, we have moved through the Gaussian channel. So we entered the Gaussian channel here, we moved through it, we entered it here, we moved through it to the upside, through it. Every time we enter it, we move through it. And so if we did enter the Gaussian channel from the upside, it would stand to reason based off history that we would move through it to the downside, and that would be lining up with a bear market and probably the end of the 4-year cycle. And that currently stands at around 70,000. And the most recent macro high before this one is around 74,000. And of course, we have a major support zone at around 90,000. Breaking below 90,000 would be the first step in the wrong direction. But in order to confirm the break of a trend that has been around since basically the origin of Bitcoin price action, we need a bit more than a break of 90,000, right? Unfortunately, we do. Now, de-risking at a break of around 90,000 would be probably a decent idea. Hypothetically, I'd need to see it at the time, but it wouldn't be good to see that at all. We shouldn't do that. But that is not really enough to confirm the break of a Bitcoin macro trend like the 4-year cycle. We need a bit more than that, and that's why I'm looking at this Gaussian channel. I'm looking at the prior high. I've kind of answered this question already. Are we following 2017 or 2021? Well, we're following neither. We're following neither, and we're following both, right? It's kind of a complicated question. We're following both in the sense that we're in the same cycle, we've got the same date range trends, but of course, structurally, every cycle so far has been different, and so the normal behavior of Bitcoin cycle to cycle is to be different from the prior cycle. So we're not really following any cycle in any strict sense. We're following the vague trend, the vague amount of days the cycle takes, not necessarily following any cycle structurally. There's been parts of this move to the upside since 2022 where we've been following certain structures from the past, but to say we're broadly speaking following a certain cycle is just untrue. Next question. Do you think we can have an altcoin season without Ethereum breaking its prior all-time high? We don't have much historical data on this point, but technically it's possible. Seeing as we only have one data point, we only have really one Ethereum cycle in 2018 and one in 2021. And if we're looking at the Bitcoin dominance chart overlaid with the Ethereum chart, we draw a yellow line when Ethereum broke its all-time high. We can see that we did see the start of the altcoin season while Ethereum was below its all-time high. But of course, we've followed with an all-time high breakout very, very shortly after that. And right now we just don't have any data worth looking at this cycle so far. Historically, Ethereum has been the leader of the altcoin market. Okay, that's how it's always been. In the same way that Bitcoin leads cryptocurrency generally, Ethereum leads altcoins. And I don't see any reason as to why that would change at this point in time, given the standing of Ethereum, given how it's behaved so far in this cycle. I think that's still true. And for that reason, no, I would see it as extremely unlikely that we see an altcoin season without Ethereum breaking highs. That would be very, very abnormal. We'd have to see some dramatic changes to Ethereum fundamentally for that to occur. And we just, we look at the total cryptocurrency market cap chart and we just see what's always been true. Ethereum is miles ahead of any other altcoin. The closest altcoin to Ethereum is XRP, and it's more than half the market cap below it. So Ethereum at this point is still the leader of the altcoins. It's also got a dramatic amount of the altcoins built on the Ethereum network. And for that reason, I think it will remain in that place at least for this cycle. I can't speak for too long in the future. Obviously, things change, but yeah. Here's a question that's not crypto related. My throat is getting a little bit sore at this point. A lot of speaking here. But I'll answer it anyway. Do you think that the mind/intellect is immaterial? No, I do think the mind is material. I'll say this. Consciousness is the only thing we know about the world truly. It's the only thing we know about existence or anything truly, really. Everything could be an illusion. We all could be robots, right? We all could be in a simulation. Everything around us could be fake. But the fact that we are experiencing those things in the first place means that there is something real about this. And that is the fact that you are conscious. You are experiencing. You are the experiencer. That is the real thing. That is the only real thing we know for sure. Okay? Now, with that said, so consciousness is the only real thing. The only provable thing is consciousness at the end of the day, in the final analysis. Right, so is that physical or spiritual? Is that physical or dualistic? Can we measure it? Well, put it this way. We're creating artificial general intelligence, right? And right now, it seems like we can create AI with genuine consciousness. Not just simulated consciousness, but it seems like consciousness is just based off neurological complexity in the brain. And therefore, if we can map the brain perfectly, we can create that same degree of neurological complexity through rubber, metal, and silicone, rather than through flesh and bone like it's seen in humans and animals. So if we can recreate consciousness, if we can create artificial general intelligence that are truly conscious, which we will know if we can do that within probably a decade, let's be real, then all we know about consciousness at that point, which is the only real thing, is that it can be created physically. And at that point, if we're extrapolating that consciousness that we've created in AI through to consciousness that we have in animals and humans, we would hence only know one thing about the only thing there is to know in the world, which is that we're conscious. And that is that we can create that same vague level of consciousness physically. And therefore, it would be illogical to reason that it's some sort of spiritual thing, some sort of wishy-washy thing that is installed in us by a god or installed in us by the creators of the simulation that we may or may not live in, right? The only thing we would know about the only thing we know at that point would be that it can be created physically. And at that point, it would be very easy to reason that it is just a physical thing. Look, this ain't my philosophy channel, bruh. This is my YouTube channel on crypto. So I'm not going to edit that. I'm just going to hope it makes sense and pray. And I'm getting very tired here in my throat. So I'll keep these two answers here short. First one, when whales are buying millions of dollars of cryptocurrency, why does the price not go up? The simple answer is because there's more sellers, right? And we can extrapolate on that, but it's really quite simple. If the price is not moving upwards, it's because the buyers are not strong enough. So even if people are buying heaps and heaps and heaps, it means there are more sellers. That's just simple as that. The price moves like a seesaw when there are more buyers. Not necessarily more buyers, but when there's more buying volume, okay, than selling volume, the price will move upwards. When there's more selling volume than buying volume, the price will move downwards. Focus on the charts, do not focus on narratives. If you see, oh, Michael Saylor bought $24 million of crypto, doesn't actually mean anything. It's literally just news to get you excited, right? What matters is the price moving? And if the price is not moving, doesn't matter how much he bought, someone was selling more. And the final question, which I'll answer very briefly here, what are the most significant catalysts that contribute to dollar weaknesses? Well, very simply, the most significant catalyst by a long shot is printing, quantitative easing, okay? And we can explain that very simply, and I probably don't even need to, because you probably know what I'm going to say here, right? When the Federal Reserve prints money, the value of each dollar decreases due to inflation. Printing is the most direct culprit for inflation. If you print a crap ton of money, you're going to see a crap ton of inflation. And that basically means, with the definition of inflation essentially, is the value of each individual dollar decreases because the supply of dollars is so high. Now, the dollar decreasing in value is actually very good for markets because obviously the dollar decreasing in value is 9 times out of 10 a result of inflation, and inflation is 9 times out of 10 a result of money printing, and money printing is great for markets. It's bad for everything else, but it's great for markets, and I'll tell you why. Because how is money printed? Money is printed and created through debt. So for example, if you go and get a mortgage from the bank, that money 9 times out of 10 is not just coming from the vault, okay? It's new money that's created from the bank, authorized by the Federal Reserve. So when you're creating new money, that's the same thing as printing new money. And who are they giving the new fresh printed money to? They're giving the money to people who are buying assets. So money flows into assets when it's first printed. And therefore, when you print a lot of money, you see a lot of assets going up in value very rapidly. That's exactly what's happened over the last 10 or so years, 14 years actually, 16 years actually, since 2008. And as you can see, the S&P 500 has skyrocketed because of it, and as have all asset prices, housing, everything. So the way to decrease the value of the dollar is to print money. And it almost sounds weird to people who don't understand the economy, but if you decrease the value of the dollar, you essentially see assets skyrocket. Guys, thank you for watching. I hope you enjoyed. There was definitely something in there you would have found useful. So if you did, leave a like, comment, and subscribe. I really appreciate that. Also, I really appreciate if you check out the exchanges. $5,500 US in rewards on Bitfinex, about 6,000 on BitGet, 6,200. You can see it there on the screen. Just by signing up with my referral link, you can get access to that. You can also get access, and you will get access, to a 15% trading fee discount on either exchange attached to your account for life. If you want a top 5 trading volume exchange, pick BitGet. If you want a global non-KYC exchange that's never been hacked before, pick Bitfinex. The links are down below. I really appreciate you using them, and you won't regret it. And then finally, check out my VIP group on Telegram if you want to. I post 4 trading signals per week on Telegram. You also get access to a group chat there with 160 members. So check it out if you're interested. Guys, thank you so much for watching. I hope you enjoyed, and I'll catch you soon.